Welcome to Wise Beyond Bitcoin, where you cover the crypto neo news, education, and opportunities. My name is Lucas.
And my name is Ryan.
And we're going to go over a little take on bubbles at large. It's going to be part of our macro outlook, but also our cryptonomics news and perspectives. We have several playlists. We have on secret NFTs, because secret NFTs are absolutely an innovation in blockchain and crypto and stand apart, as well as the secret network, your hub for secret updates. So check it out. How to start your journey if you're new to DeFi, crypto, secret network, Kepler wallet on your phone, on your web browser, sending, receiving, how to stake, and validators. Why picking validators matters, and how you can reward yourself and reward the community by making a wise choice in who you support. So yeah, I mean, Ryan, you get in the macro outlook. This, what we're going to talk about today, is pretty much, although it's crypto, it's also definitely macro.
Yes.
Related.
Yeah, I would say it's an extension of the macro outlook series. We're not talking about any kind of Fed news or press releases today. There's no breaking news about anything on those lines, but we are going to be discussing macro themes and kind of where we're at in the broader cycle, right?
Absolutely. And how to prepare yourself. And we will get back to, during these times of bear markets, they're called, or consolidation periods, there are ways to benefit and reward yourself, which is why we have airdrops and crypto opportunity playlist. And we talk about being able to compound rewards on networks that have long-term viability. So for those that are in it for the long haul, this is not trading, financial advice, legal advice, commercial advice. This is just education, entertainment, research, our perspectives. It's a new emerging technology. We're all learning this new language. It's dynamic as it grows. We're all growing with it. So we hope you enjoy this content. If you do, hit the thumbs up, the subscribe notification bell button thing, drop a comment, let us know. We do a Thursday night live stream where we chit chat and do giveaways, more giveaways and opportunities. And right now, I suppose, let's get into the idea of bubbles, and that it's not just crypto. It is a market phenomena, but like you were talking about before the video, talking about flight to quality, there's a reason why so much value has been funneled and pumped, directed at blockchain and the crypto markets. Because we're even seeing now that the reality is most of the crypto market, I mean, Dogecoin pumping 5%, crypto.com, which is now LA Staples Stadium. Would you agree with me? You don't have to, I'm just asking. Would you agree? Of course, you never do. Never have to. Would you agree with me that of this 1.96 trillion global market cap in cryptocurrency, that I don't know what a lion's share exactly is, but a lion's share is of institutional investment at this point? I mean,
for sure.
Okay.
Yes. I mean, I think that's definitely a well-recognized fact that in the last, year to 18 months, 2 years really, that there's been a lot of institutional Wall Street money, not just Western, but all over the world, right? All over globally, there's all kinds of investment happening through an institutional focus, and that's something that's showing that the space is maturing away, but it's noted that that's also money that can be, it's like a hot money. It can go in quickly, it can come out quickly, right?
Absolutely, in a coordinated way. So the idea that there's a lot of us on Twitter, social media, YouTube, and there are a lot of grassroots community that are building value and really helping the ecosystem grow. And they're still around doing that when these big resources go away quickly, which they tend to do at certain times. And to be prepared for that and not to be shocked when it happens, when you see markets dump 10, 15, 20, 30, 40, 50, 60, 70, 80%, if that comes to be, don't be surprised. These are some really thin, these are some very thin markets,
right? Really. And there's precedent for that too in the space.
Absolutely. So
let's maybe take a little look back to the late 90s and talk about the dot-com bubble. I'm not sure how many of our viewers are familiar with this period, but I suspect many are. But this was the technology bubble our childhood, right? That we kind of grew up and come of age during. And one of the things that, and this follows the typical pattern, right? So we're looking at this, the S curve, or the typical stages of a bubble. And this was more or less the pattern that we saw during the dot-com bubble. But the one of the notable things is that these assets tend to run up right together, and then but it's not the case that none of them come back in the future, right? So it's possible, it's very likely that, or it's always the case that there's some investments that people made during this enthusiasm, a hype phase that still paid off long term, right? I mean, I'm thinking of names like Yahoo is an example, eBay. There's numerous names that came about and were developed in this period in this manic hype, irrational exuberance period. And then there's a lot of names that just fell away and never were heard from again, right? Because there was a lot of companies that were just simply tacking .com onto their brand, right? And then going public and raising a lot of money.
Just like there's a lot of people making forks and making tokens,
right,
and for quick cash grabs, and there are some developers and some teams that are building, protocols and projects that are going to be, which is why participation, we mention all the time, participation, not just for earning airdrops, but for staying abreast of the latest developments and understanding where the value is needed and where it's being built. So participation,
right.
staying, if you're interested in the space and you're part of the community, then even
you were bringing up something earlier that I thought was a good point, and we probably want to touch on it. But NFTs are unique, and obviously they're non-fungible, and that, which means unique, but they're unique in a very specific way, in the sense that they're not the price of they're not really priced in the same way that other blockchain assets are, right? If you think about Ethereum or Bitcoin or Secret or Juno or any of the any of these tokens, they have there's a market for them, right? There's liquidity, there's volume, and there is price action, right? There's buyers and sellers, there's a spread,
because they're fungible,
and it's because they're fungible,
because
right?
they're fungible. We've got markets with spreads and liquidity where you've got price order sheets. With NFTs, because they're non-fungible, you can't have a price order sheet with a spread in the same manner. It doesn't really work.
Every NFT is its own market,
right?
It's a unique asset, right?
Piece of art, right?
So the point is that makes price discovery difficult, right? It makes it, to me, it's much more, these prices you see on NFTs in some ways can be thought of just as offers, and not the same as like a market determined price that's the outcome of buyers and sellers bidding against each other, right? It's really just, this person has this, or they would accept that price in exchange, but it's not what you would consider to be a price, in the sense of, say, the price of Bitcoin today is X amount of dollars.
Right. And the price floor is often the lowest something has been sold for, but there is actually no floor. Where in other DeFi projects, when they say a price floor, they literally mean you can always come back and redeem what you
at this
have
price
for X Ethereum or X Bitcoin or X whatever it is. There's a floor. So there is no, floor. Now we are going to talk about, so NFTs don't have the liquidity, and they don't, to hold that value is easily, and have more potential, I guess, to just drop and plummet when the times get tough, because there's not. That being said, if there's strong communities, they may just as well, like fine art, stay holding their value.
Sure.
And we might see that on a couple chains. But we recently did a video, pardon me, on this specific topic. And there is one new tier of NFT that I think breaks the mold of, well, no other NFT could boast the same quality. And it allows people to kind of ride out bear markets in a way, in a unique way that never before could you have a digital asset that allowed you to have the same position.
And there's another thing too that needs to be said. So when when you're talking about this new class of NFTs, let's be specific. We're talking about NFTs that have a reward stream, and the main thing we're imagining is an NFT that's a validator, that's a share of a validator, right? So, and a Clandestina is an example. Redacted Club is another. Midnight Teddy Club is another. So there are NFTs in this space that are actually shares of validators, so that the person who owns that has a reward stream that they can kind of bet on, right? And no, it's that they have that they're owed, right? That they will receive. And what that makes possible is this a kind of an accounting where you can add up those future revenue or future reward payments, and you can discount them through the time and come up with a present value of what this thing is worth, right? And it wouldn't be purely based in arbitrarily valuing some aesthetic, like, oh, the art looks cool, or it's or community is cool or whatever. But this is actually a number that is, you can write down and say this has meaning. It wasn't just pulled out of the air, right? It's going to have a percentage of some token that you're going to receive, right? And you can just put a calculation to it. And so through that, you can come up with some kind of discounted value, some present value.
Right.
And I feel like that's very different. That's very different from other non-fungible tokens that don't have this kind of price discovery mechanism embedded in them, right? They're purely a function of, well, what do other people value this at, right? And that can range through, as sentiment shifts, that valuation can range. And that still occurs with the secret NFTs, with these tier 1 NFTs. There's still a range that things can happen in, but I feel like now at least there's a floor that you can kind of find with your feet, right? That's firm, and say, well, at least we know it has this baseline rewards coming to it. So you can say it has this value inherently.
Right. And that doesn't mean that the floor price, so it is artwork and it's historic because it's the first one of its kind. And there are others that are acquired because of other utility and dynamics. So the floor price doesn't mean in traditional finance, which from our traditional finance background, I would love to actually.
It's a good thing. It's a good thing that we don't have real price floors here, right?
Yeah, it won't be hard to take that present valuation and discount it once the rewards start coming in from the validator nodes, and treating it in a similar way when it comes to a price floor for price floor valuation. But here you also have other perks in being part of a exclusive community, just like all the other NFTs, Bored Apes. There's no difference here. You've got the ability to build out a website, say only people who have my NFT can come in the website or something like that.
Sure.
Or come in the Discord.
Some kind of access.
It's already with other Discord and Telegram, so it's not difficult. And we just did a video on this. So there's 2 more. Midnight Teddy Club,
right,
and Redacted Club are also in this tier.
So getting back to this,
what am I talking about? Midnight Teddy Club hasn't minted yet.
Right.
In fact, if you listen to this video and you drop a comment and you say, hey, you messed up and I want to be ready for that Midnight Teddy Club, and you'd like a whitelist to reserve your spot is coming up in like 18 or less days, then yes, go ahead and drop a comment and we will work something out for you.
So getting back to the macro picture, I feel like we've been talking about this a lot, but the Fed is now changing their narrative, right? They've announced that there's about 4, 5, 7, some number of rate hikes that they're going to engage in this year. They're going to stop purchasing assets every month, and there's going to be some sort of attempt to reduce their balance sheet and sell off some of the assets they've accumulated. So all taken together, this is definitely a shift towards a tightening of the credit money supply. It's going. And so what do we draw? What kind of conclusions do we draw from that? Right. I mean, that's definitely not bullish, right? That's not going to.
We're in here somewhere in the new, hey, everyone's new paradigm to a return to normal. People are thinking like, oh, okay, things are coming back up. But, the reality is, and this is not a slight on crypto or blockchain. This is saying, look at the whole picture together. The whole picture together is right now, there's a lot of air that needs to come out of the market at large, and most of the investment that's in crypto, love it, like it, just be aware, is institutional investment. It's not people mining and staking in their, in their apartments or homes or their whatever. It's a lot of big institutional money that are coming in and playing around, putting it in, putting it out. Look, boom, here we
Sure.
go. And when they want to pull it out at the right time, for whatever reasons, the market is going to reflect that. So I feel that we are going to see more of a deflation. Now, I also feel that this is the year of decoupling. I'm going to put that idea out there. Could be massively wrong, but I feel that this is the time where we're going to start seeing over the next year or so, where we see at the same time of that correction, it won't be as severe as maybe people in the past, because we'll see a little bit more of a decoupling where there's a lot more flow of assets leaving traditional finance,
right,
and starting.
There's a couple different decouplings that I could see playing out. I hear the one you're talking about, which is, if I'm reading you right, it's some people who would traditionally be in traditional assets are looking towards opportunities in Bitcoin, right? As this tightening cycle plays out, perhaps crypto takes a hit initially, but then as time goes on, people realize, well, even with the uncertainty and the volatility, this other space is the future. This is where I want to be, and the opportunities there are better.
Making it easier for people to get it. They're already making it easier for people.
I can see that playing out now. But there's another decoupling I'm thinking too. What if, and I could be wrong, but what if in this coming shakeout, this coming bear market, you see some of the more centralized assets getting hit the hardest, right? The ones where the most institutional money's gone in. So this would be your Bitcoin, Ethereum, perhaps Polygon, Solana, Avalanche, maybe the bigger market cap names, perhaps. And I could see that, those deflating harder. And of course, some of the altcoins would go just as hard because, sure, they're smaller markets. But what if, as that process occurs, that the broader space starts to gravitate towards some of these others, the secrets, the IBC? I mean, I'm just wishful thinking to some degree, but I could see an argument where
there's a reason for that,
where the next wave, moves over, and we don't see purely it being centric.
You have to it's juxtaposed to the legal framework and the news and announcement. Sure. Right now, there's so much going on over what's going to be
what's the regulation
viable and what's not accepted. And you hear all over the news, basically Bitcoin, Michael Saylor, Elon Musk, Bitcoin and Doge and Ethereum seem to be A-okay, and everything else is, I mean, I say everything else, but so it could be at a point in time where it's like, well, we called this Bitcoin being a reserve currency for the world. They're already talking about adopting it on the balance sheet of central banks. People are making it. Yeah. That's like, well, we've been talking about this for a long time.
Right. And in that world, it will be, I think, secret and privacy chains that have that fundamental layer, that they're going to become way more important and valuable in that kind of world.
Even in a future world where public blockchains are highly used, dApps are still going to want to bridge over to secret network to be used for enterprise, for other solutions for privacy. So many things can come over and have a public layer and still come over and be used on secret. So the future potential value of secret network is definitely, I feel it's undervalued and definitely unknown. Sure. As more people learn about blockchain, as well as those NFTs. We talked about tier 1 NFTs. God, I'm just so thrilled with all the innovations going on in the space right now in secret network. So shout out to Clandestina Gang for that validator node fractionalized DAO, as well as Redacted Club and Midnight Teddy Club, because they're all breaking that out, and that, when we talk about bear markets and consolidations, sure,
flight to quality is the name, right?
Now you're holding on to something. Now you're holding on to an NFT that is going to, it'd be like holding on to a fractionalized Bitcoin miner. It'd be literally like if you could just have a piece of a miner and just sit back and be like, oh, this picture represents a Bitcoin miner. If they start offering JPEG Bitcoin miners.
One thing I've noticed is that I can better stomach dollar falls in the dollar value of my investments when I know that I'm getting more units of those coins in my wallet every day, right? Claiming the rewards. It's like, yeah, I fell, X percentage, but I also just earned more coins, right? And so it definitely softens it. So I feel like the flight to quality argument is sound, right? These NFTs are earning reward streams even through sideways choppy markets, And that's definitely, if nothing else, it makes it easier to weather and to be a hodler, right? And to secure the network long term.
Now, before these came out, we've talked about this and we've had ideas, and other people I'm sure have talked about it too. But our real excitement is the idea of NFTs that have a digital asset, some type of value behind it that comes forward, like a bond, like something hidden.
Mm-hmm.
Secret Network has created this new idea of what can be built, the potential that can be hidden behind it. So you can have an artwork or anything.
Right.
It doesn't need to be
Private data,
whatever you want, just something on the public that says this represents a, a stake of XYZ. And I would love to add and build out and do things with this ecosystem that I think would be pretty fun to help support artists and the potential of what can be done with this platform. NFTs tied to a reward stream.
Mm-hmm. Right.
This new tier. But to start with, what these teams and artists, these groups, these DAOs are pioneering, these are some exciting times. So if you want to learn more about it, you know what playlist to go to. I think we pretty much covered our view on the bubble. Now, hey, you know what? We could be like wrong.
We could be wrong.
And yeah. Oh, look, all of a sudden, but you know what? I don't, I'm going to be wrong about a lot of stuff, and I will. However, this isn't going out on a limb, and I'm not taking a risk. I'm not. Really,
I think you're on safe ground.
I'm not saying anything like this is like if clouds are coming and it's raining and you see the clouds blowing this way, you're like, hey, get inside because the water's gonna get wet.
Right.
Oh, you think that it could just stop right now. You're right, it could, but right now there's a tornado right there. It's lightning, get down in the cellar.
Right. Well, I think our background is what makes that so obvious to us, where other people, if they've been involved in learning whatever trade or they went to school for X, Y, and Z, if they didn't study money and interest rates and macroeconomics and aggregate demand, aggregate supply, and all these price level, all these issues, then it might not be as obvious what the impact of a Fed tightening cycle coming on.
Maybe it makes it easier to be high on the hopium, and which we were when we first getting crypto, and not there's a lot of stuff going on in the macro world, but at this moment when the Fed comes out and says, by the way, we're going to straight tighten things up 4 to 5 times. I mean, I've heard people that have been working deep in the traditional markets for a long time that don't care or look at all at crypto, and it's rippled out in their world. Things are about to get tough in the economy, in the world at large. So when that happens, this can apply to the S&P, to NASDAQ. This can apply
to
the market. That's what we're talking about here, is that this bubble is not just crypto. It's saying that crypto has been a flight to value from the beginning. A lot of people have been investing in crypto because there's so much potential and so much to be done in the future. However, when the market resets, a lot of that goes in also has to be able to come out. And so it's a reflection of the bubble at large.
And there's way more leverage in crypto than what meets the eye too, right? That needs to be said. So some of the same dynamics about way leverage plays out and unwinds.
As much leverage as in traditional finance. No. Let's just make that clear. It's like,
that's true. But still the same dynamics.
Yeah, not the same. I mean, not the fractional reserve that you're legally allowed to pyramid.
No, I'm talking about the fact that leverage can, whenever you have price deflation, how the liquidation process unwinds, and you get that cascade, that same dynamic is at work, And but I hear you. It's comparing the two can be deceptive when you really understand how much leverage is in the mainstream system. It's kind of mind blowing, really.
Yeah, because the leverage in the crypto has all been done through it's
through
DeFi.
Basically
collateral based. It's like if you take up and people are getting liquidated, whereas in
traditional markets, you can rehypothecate assets for many, 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 many times over, right?
I don't know if collateral that's backing is very small.
And I don't think that same thing's done on Abracadabra.
Can't and chant. So yes, this is our bubble update for the most part. What can you do to prepare yourself? Well, if you're trying to trade and play the market, this is not financial advice. I think we already mentioned this is just education information, but If we didn't, then that's what this is. It's not commercial, legal, financial advice. It's our perspective. We love to look from our background in economics and in markets and monetary theory. We're going to continue to share this information because we just enjoy it. And really for us, it's just funny, it's really exciting times because for us to be alive during digital assets, people talking about Bitcoin or Ethereum or what's a new monetary, standard, what should be hex, what, or secret network, shade, silk. It's like we were studying money and what is money and the theory and history of it before Bitcoin was around and we even knew it was going to exist. So to be a part of the conversation.
Oh, it's exciting.
And to see these different things like, well, I should be money. And we're looking at it like, well, what makes you good money? Someone says, well, I should be money. Okay. Well, why do you think you should be good money? Right.
Right.
It's funny to see.
And just happy to see the fact that there's now a competition or the idea that that's possible. It's definitely revolutionary.
And I would say that we're so early with what we've seen so far. Definitely promote to your senator, your legislator, your leader, your whoever, and to your friends and family, promote the idea of healthy competition and allow for, because right now there is no solution. There is no, this is the answer to all. And if everyone just did this, no, because there's scalability, there's security, there's privacy. There are issues that are being worked on at the moment.
Yes, so it'll take time.
Yeah.
One thing to wrap up before we leave is to highlight the fact that this image should not be taken to be some kind of a doom and gloom scenario kind of thinking where we see just the bottom falling out and just some kind of despair, for years on out. I think in terms of what I read and also what I believe from seeing previous cycles play out, I feel like the pain will be severe. Don't get me wrong, but it will be short-lived in the sense that we will see a reversal of monetary policy probably quicker than what most people are predicting, and that it won't be too long. We won't have to wait too long before the markets dump and before the narrative of inflation being the big worry shifts and we start talking about deflation and deleveraging and the risks of that. And then we shift gears into another round of QE, another round of purchases and more low interest rate policy. And what could bring this on, something to look for, something that would maybe even speed this timeline up would be if there was another outbreak of COVID, right? If there was another variant that all of a sudden pops up in 6 months and starts to wreak havoc.
That's just going to show the most incompetent medical system the world has ever seen. Because at this point in time, you've had all these vaccines and all these people and all the king's horses and all the king's men, injecting, the majority.
Well, yeah,
of the
but regardless,
so
that'll be the thing. That'll be the event, whether or not it happens or not. If it does, I could see that would be an event.
I still agree with you that there can be just like they try to send false signals, or not false signals, but not telegraph. The Fed doesn't like to telegraph its moves before it makes an announcement. I can easily foresee that it not being as drastic after some tightening goes by, and then being able to announce, oh, by the way, we're able to do this, this, and this. And you can see that cryptocurrency blockchain being an excuse or a way to let the bubble continue to go longer and further.
Well, that's what it'll be. Yeah. Right. And to wrap that up, I feel like once you hear the announcement of another round of QE, that's the time to go to probably buy the dip, because it's going to rip from there. Right.
Actually the best time is before they announce QE.
If you can do that. Yeah. If you can read the tea leaves and see yeah, for sure.
Get in during the tough times. If these are the tough times, do your research now and be able to ride the dips, earn your stripes, get some salt, and then be ready to talk about the times when you had it, when it was going, earn it, enjoy the ride down and compound what you have in the right protocols and earn those rewards, so that when the prices do reflect the value in the future, that growth, that dynamic community in the background, well,
you're still in it.
You'll have even more than you had when you started.
Yes, exactly. Well, I think all that non-financial advice is is about as much as we can say on the topic without crossing over and
No,
saying more than we actually could know, because
yeah,
this is all speculative. We don't know what the future brings. Things could rip tomorrow. And this whole
it will.
narrative of sideways of a 2022 correcting and of a deflationary year that could go out the window, right? We
So
don't
you're
know.
saying we could see this will be the year of the decoupling, where the raising of the interest rates and the pain
Yeah.
felt
Well,
in the
inflation could
traditional
be such.
markets.
What could happen is the inflation problem could become too big to contain,
So
such
that
that the
institutions
medicine.
start bleeding out into the digital asset
Right.
crypto
Right.
community to take it out of traditional finance.
All that has to happen is we have to lose
There you go.
confidence in the Fed and their ability to do anything about this. Anything real about it. And if the problem continues without abation, gets worse, and they can't do anything about it, then you could see a decoupling. But as long as we have some faith that it's going to be transitory, or that they're going to be competent to deal with it, then I could see, the narrative continuing. But as soon as people lose faith and they feel the Fed's out of ammo, right, to do what they need to do to solve the problem, that would definitely undermine confidence in the dollar.
Well, that reminds me, we were talking about this, that just made me think of something else. And hopefully, El Salvador, some people got wallets and crypto to start with. But right now, you have politicians getting paid in Bitcoin, and they're laughing in people's faces, like announcing it. Like,
Athletes too.
All these people getting paid in Bitcoin and crypto. And you talk about the inflation hitting the digital asset market. Institutions are allowed to come in to digital,
right,
Bitcoin and crypto. Michael's on large scales, are they getting poised? And that pumps the crypto market up when you allow all this. But that's before many other people have easy.
That's not even the mom and pops people, running in, the individuals. It's just that's some institutional money. Yeah.
And there are a lot, you're seeing an institutional run kind of jumping in before the masses now. Like,
right
there
now,
are politicians getting paid in Bitcoin right now. They're the people, whoever they're elected by, most of them have no idea what Bitcoin is. So then it'd be like, hey, I'm innovating because I'm getting paid in digital asset you guys know nothing about. It's like, well, that's not helping. That's not helping anybody.
Right.
And if you're representing them, how are you getting paid in something they don't all have first? In fact, spread this tidbit. If you are a politician getting paid in Bitcoin, it should be mandatory that that all the people underneath you have a wallet and have some first. There you go.
Yeah. Or you should at least give a percentage away for outreach. Maybe give away like 5 or 10% to help your constituents join you.
There needs to be a program that allows for
an
airdrop or a sort that you donate, because how are you representing if you're getting paid in Bitcoin and they're watching the news stations say Bitcoin's only used for criminals? It's like, what are you talking about? Well, I guess
right. Maybe, depending how you want to read that. Yeah.
Never mind.
But I definitely think about the Animal Farm quote, some pigs are more equal than others. And that's what that makes me think of, It's like we're going to be a part of a class that's going to be more or less spending and undermining the value of this currency unit that you guys all have to use, but we're going to be paid in this other thing that's appreciating, or at least not being debased at the same rate, right?
Pretty much. And if Dogecoin and BitTorrent pumping right now don't tell you to
this goes to prove that we are in a bubble, right? Because that's one of the problems with bubbles, is that there's a lot of bad names that Cinderella just as much as the good, right?
Now, here's what I've heard. Then we'll end this to bubble, and because this doesn't really apply. Aside, you can end the video now. Here's what I've heard. Dogecoin is going to move to proof of stake or move to some new innovative ecosystem that's going to be extremely valuable and reward everybody. And you know what I say to that? Because it could be true. You know what I say to that? How shameful. Like, okay, great. That's your entry into the market, by tricking people, by not coming out transparently and saying, this is what we aim to do, this is what we're building, by coming out with horrible tokenomics, the super inflationary tokenomics, and saying we're just a joke and this doesn't. And when you compare it to others that are working really hard diligently to say we're going to use this mechanism and this mechanism. So, and it's gotten so much weird institutional support for having such poor tokenomics. So if all of a sudden there's some announcement that Dogecoin is now this, it's like, okay, well, other people are already that. So
yeah, right.
you know?
And you guys didn't plan on doing that from the beginning.
Yeah. So what gives?
Yeah.
Why don't you
I've never been.
stick with the Doge. Just keep your Doge thing. In
I'll let
fact,
them. I wish them the best, and if they're successful, then great. But I'm not going to be part of it.
or actually, I guess if they ever do that, I would say that people saying, well, then I guess you admit your tokenomics weren't that good.
Right, because you had to change.
If you have to change that drastically, you admit that right now it is pure garbage.
Well, they won't say that, but I think that will be implied.
So that's that, and that's about bubbles and how to be aware of where we may be and where we may not, because that's about economics, is saying that
who knows?
maybe, who knows? But when it comes to NFTs and their place in bubbles, there is some significance there for sure.
Yeah,
some statistical significance. And
there's definitely something unique about NFTs that have reward streams. We can say that's for sure. Now, whether or not they end up doing better than some of the ones that are purely on membership benefits, exclusive access to the community, that's up in the air. Bored Apes and some of the others have massive market share and have done very well and have a lot of enthusiasm. But there does seem to be a new kind of NFT that's emerging, and I believe has the foundation to be better in terms of what it can do for its users. Whether or not how that plays out remains to be seen, but it definitely merits looking at and, I think participating in.
Sounds good to me. I dig it. We'll be here to share the alfalfa, to feed you the secret updates, the Crypto Neo. You know where to go for the playlist to get you started. And yeah, until the next time, have a beautiful day and namaste, y'all.
Thank you.